global markets closed the week, not just with price moves, but with a clear shift in capital flows, as large institutions started reducing risk and central bank signals shaped market direction. According to Reuters, investment bank Morgan Stanley cut its exposure to global equities due to rising oil prices and Middle East tensions, moving to a more defensive stance, a move that is often seen near market turning points. At the same time, Federal Reserve Chair Jerome Powell said in a Harvard speech that the Fed is in wait-and-see mode to assess the inflation impact of the conflict, meaning the focus is not on easing, but on risk management. In Europe, ECB member Yanis Stournaras said in Bucharest that if inflation expectations deteriorate, the central bank must react quickly. While Bank of Japan Governor Kazuo Ueda warned that yen weakness is becoming more important for policy. This creates a clear global imbalance. The US is tightening, Europe is cautious, and Japan is dealing with currency pressure, meaning global liquidity is not moving in one direction. In energy markets, risk pricing continued. Brent crude tried to hold above $110 during the session, showing that inflation pressure from energy remains present. Into the close, US indices finished negative, with selling pressure in technology stocks. Nvidia and AMD moved lower, while energy and defense stocks stayed more resilient, showing that the market is not fully risk-off, but still searching for direction. Volume also sent an important signal. Strong activity in index ETFs showed that positions are actively being adjusted, meaning this is not a quiet market, but a market where capital is rotating. Gold failed to show a strong reaction, remaining under pressure due to a strong dollar and high rate expectations, another signal that liquidity conditions remain tight. Before moving to crypto, it is important to note that crypto often reflects true risk appetite, as liquidity tends to react there first. In crypto, the picture is clear. Prices are not falling but not rising either, meaning the market is indecisive. Bitcoin stabilized around $66,000 into the close, while Ethereum held above $2,000 but failed to attract strong buying. Total crypto market cap stayed flat. Volume remained limited and activity stayed concentrated in Bitcoin and Ethereum, while altcoins continued to show weakness. According to CoinDesk, weak ETF flows and regulatory uncertainty continue to prevent a strong trend in crypto, meaning institutional money is present but not aggressive. This aligns with the macro picture. As long as the Fed stays tight, the dollar remains strong, and liquidity is limited, a strong breakout in crypto is unlikely. Overall, this is not a collapse, but a distribution phase where large capital slowly reduces exposure while smaller investors search for direction. In such environments, trends are weak and headlines drive the market, and direction will only become clear if there is a shift in oil, rates, or central bank policy. We talk markets, not noise. D&D.